Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to take a look at dollar Swiss. Now, we did take a look at dollar Swiss last week and it was featured because of the inverse head and shoulders pattern that was forming in the market. And what we looked at was the potential for a pullback into the neckline area for a long opportunity. And we outlined in that video that we may not get that pullback because of how weak the Swiss franc was. And what actually happened then, price rallied and continued to head towards a key resistance level. So what do we need to do next? Now, typically an inverse head and shoulders pattern shows us a change of trend, and if you are a trend based trader, you would be looking to trade to the long side on a pullback or retracement into a key support and resistance level. Now, that support and resistance level would be this neckline area around about 0.8920. okay, so that for you would be that long opportunity in and around there. However, if you want to be a buyer from this position, you can look to trade down into this level, because as we know and as we've been studying and featuring in the videos recently, is when the market is in an impulse and retracement phase, we see the lower time frames change in trend. Okay, so for instance, if I go down to the 4-hour time frame and we look at the impulse and retracement phase in this little section here, so we can see when the market is in an impulse phase, the 4-hour is trending to the upside, it's making higher highs and higher lows. When the market is in a retracement phase, we get either a ranging market or the market more than likely making lower lows and lower highs just through here. When that changes, we get an impulse to the upside, okay, and the market continues up. Now, what we're having here is a potential change around, and it all stems from the daily time frame. And if we look out left, we identified a potential area of resistance being these previous structure lows just through here, as it had a high volume level. And what we suggested was, so we've actually just jumped to the weekly so you can clearly see it's those weekly lows through here. What we suggested was that if you were long in this move, you'd look to take profits in that position. Now, because of the recent jobs number out of the US, we saw the US dollar weaken slightly, and we've had this almost key reversal pattern being highlighted. So what that suggests to me, that if price continues to fall, is that we're in a retracement phase once again, and what we're likely going to see is the 4-hour change cycle and come back into a key level. So if we're looking at 89.20 as a zone for where price could come back into, what I would be expecting here is the market to make a new lower low, pull back, and then continue to the downside. So this area through here, or through here for instance, could be a decent area to start looking for a very short term swing trades and opportunity down into the major support point, because this is where a lot of eyes would be on the market. So the market could drop down into this level and even go beyond it, because if a lot of people are waiting to buy down in here, the institutions may look to take out these lows just through here. So for me, dollar Swiss is looking for a potential reversal setup into 89.20, because that's where the trend traders would want to be buyers in the market. Keep an eye on this one. If you have a similar outlook, drop a comment below, let me know what you think. If you did like the video, give the video a thumbs up, and I'll catch you in the next one.